Understanding tax avoidance. Tax avoidance is the legal exploitation of loopholes in tax laws to reduce tax liabilities. It differs from tax evasion, which is illegal. Sophisticated tax avoidance schemes often involve complex transactions across borders. Their goal, to minimize taxes paid to governments. These schemes exploit differences in tax rates and regulations between countries. Companies may shift profits to low-tax jurisdictions, artificially reducing their tax bills. While legal, such practices raise ethical concerns. Critics argue they undermine fair taxation and erode public trust. Sophisticated tax avoidance often begins with reclassification. Imagine a multinational company selling products in a high-tax country. They set up a subsidiary in a tax haven, like an island with low or zero corporate tax. The company then routes its profits through this subsidiary. Instead of directly booking profits in the high-tax country, they reclassify them. Goods might be sold at a lower price to the subsidiary, which then sells them at market value. The profit appears in the tax haven's books, subject to its lower tax rates. This reduces the overall tax burden for the company. However, it deprives the high-tax country of revenue. Stage 2 involves recharacterization. After profits are shifted, the next step is to disguise their true nature. This often involves complex financial instruments and transactions. One common method is using back-to-back loans. The subsidiary in the tax haven lends money back to the parent company in the high-tax country. Interest payments on these loans are then deducted as expenses. This artificially inflates expenses in the high-tax country, further reducing taxable income. The interest income received by the subsidiary in the tax haven is often lightly taxed or tax-free. Tax authorities worldwide are fighting back against sophisticated avoidance schemes. One approach is the substance over form doctrine. This principle allows authorities to look beyond the legal form of transactions and examine their true economic substance. Anti-avoidance rules specifically target and counteract common tax avoidance schemes. International cooperation is crucial. Tax authorities share information and collaborate to close loopholes exploited by multinational corporations. Understanding and complying with tax laws is paramount. Ignorance is no excuse. Engaging tax professionals can provide guidance on navigating complex regulations. Transparency and ethical behavior are essential for a fair and sustainable tax system.